Welcome back guys to another Zero DTE video, and today Ernie's going to be talking about price movements, so make sure you stay tuned. If you're interested in becoming a pro trader, check out the link in the description where you can find Ernie's course. And as always, I hope you enjoy guys.
So when we put on a trade, we're at the money here. We put on some trade. We're choosing direction. It could be arbitrary. We're starting right here, and price is either going to go this way or this way. And we choose to use an asymmetric risk to reward, so our loss is very small here, but our potential wins are very large here. But we also know that this movement, for all of our wins, let's say that we are not that great at picking direction. We're 50-50. We pick direction about 50%. That means that about 50% of them are going to go this way, 50% of them. Well, we know just about how far price is going to go in that 50%. There's going to be about 70% of those that are going to go right up to here. And then about 25% are going to go to here, and about 5% are going to get to here. Maybe some smattering coming out here, something less than 1%. I know that doesn't add up, but just use your imagination. So we know this. Now, the problem is that that's where it's going to ultimately end up. We don't know what it's going to do in the course of a day, because the day is made up of several hours, right? So there's, 6.5 hours in a day, a trading day, and a lot of things can happen. That price could spend the first hour and go all the way out to here and then end up here, right? Or it could go all the way out to there and end up here. Or it could just go to here and just stop there. No one knows. But we do know these probabilities are fairly regular. The other thing that we know is that in terms of time, let's say that time is on this axis, we know about how fast this premium is going to grow. We know during certain volatility eras where premium is at this point, T1, this point, T2, and at this point, T3. A general idea. We don't have to know exactly where it is. So we have probabilities, we have an understanding of how premium is going to decay, and then we have this three-dimensional problem that we have to figure out when we're going to hold or fold. We have to make hold or fold decisions throughout the day, wherever price is on this path as it's going back and forth. That's our ultimate job. Now, when we got into this, we're talking about low volatility. And how does that affect this whole equation? Well, the way it affects it is that it forces us to take advantage of the probabilities, the expected decay rate of premium, when it's going to start, when that event horizon is, that event horizon somewhere around here, and where we are, and what our tolerance for risk is. All of these things come into, now it sounds like super complex, and I guess, when you really think of all the things that bring you down to a particular decision, it does sound super complex. But when you're trading it, you're only thinking about one thing at a time. You're only thinking about, well, where am I? When am I? And should I hold or fold? When? What time of the day? Why do I want to know what time of the day it is? Because that will tell me approximately how much premium decay there is and how much there's left. Now, there's another aspect to that premium decay in terms of not only when, but where we are relative to that profit curve that I drew there.
Thanks for watching guys, I hope you enjoyed the video, and if you did, make sure you hit that subscribe button and hit the like button below. If there's any questions that you might have for Coach Ernie, make sure you leave them in the comment section. Thanks guys.